So welcome again. We have done corporate boards. We have seen how they work. With an example of the EABL board that is floated in 2025 for 5 years up to 2030 with an interest of 11.8% annual interest that you'll be receiving, which will be paid semi-annually. So today, there's a question that keeps on coming. Is the EABL board better than putting your money in money market fund or shares? So today, let's drive that knowledge down and you understand where you should put your money in. You can actually kill three birds with one stone, no? Only if you follow the right strategy. So you will earn, you invest, and grow. And you can watch live and also recorded trainings on my YouTube channel, my WealthGate KE part of Gentasad Studio. So if you search for Gentasad Studio or my WealthGate KE, you should be able to find that channel. My name's Peter Chege, and that's my WhatsApp number 0723 384 775. In case you'd want to learn more about what I'm covering. I'm also covering shares, international markets, forex, pension, and other investment products. So most of the investors always think of picking an investment. So you either put your money in both money market fund or shares or international market. That is one of ways you lose opportunities. If you decide I need to compare how much I'm getting from both money market and shares, you lose so many opportunities. In these investment assets, you don't need to choose. You actually need to think, how does one asset fit into another? Then when it fits to another, whatever it fits, remember it's free. How does that free money into another asset feeds another? Then that's how you grow. So in this training, we'll see how you can use your EABL medium note board, because it is a board, corporate board, to create a self-growing investment cycle. This is an opportunity of a lifetime if you utilize it between now and 10th November before the offer closes. And this knowledge should extend to other investment. So it doesn't mean when that offer closes, this video doesn't make investment decisions. So let's proceed. So let's first understand the EABL board. It's 18% interest medium note per year. So the interest will be paid semi-annually, May and November. So if you put your money, you multiply by 11.8%, then you divide by 2. So in May, that's a portion you get. Then in November, every year until 2030. And this interest is credited directly to your bank, less withholding tax. There is a withholding tax. That should not worry you. Remember, interest is free money you are getting. So the board will run for 5 years. You're actually loaning money to EABL. Then they promise to give you interest for 5 years. Then they return back your money as it was. So here, interest paid twice a year, May and November, straight to your bank. Let's say you invest 30,000, so be receiving 3,540 per year, less withholding tax. That is, every 6 months you receive 1,770. Again, net taxes. So that is passive income without touching your capital. Remember, the money you have loaned them will be returned on the 5th year unless you decide to sell in secondary market. So you have seen an example of how it works. So 30,000 times 11.8%, it comes to around 3,540 unless we are withholding tax. Then it's paid in 2 parts. 1770 May, 1770 in November, straight to your bank. So this is what it means. You read EABL, you give EABL 30,000 before 10th November. I've done a full video now to do that application and pay as you apply. Then they will pay you back your money plus interest. That interest will be paid twice each year. That is every 6 months. You'll be receiving 1770 automatically to your bank. So this becomes a consistent stream of cash flow. Then your first step towards building a cycle of investment. Because then how does it work? You'll invest the interest into money market. So instead of deciding, do I put my money in money market fund or bond, put it in the bond. You're already assured after every 6 months you are getting cash directly to your bank. We withdraw that cash and put it in money market fund after 6 months. That interest that you receive, it will still now start earning interest daily on money market fund. Otherwise, if you put your 30,000 in money market fund right now, you won't be able to invest in the board. What I'm saying, put in the board after 6 months. When you receive your first interest, put it in money market fund. You get at least 10 to 12 annual return. And your board keeps on earning interest. You have not sold. You have not sold anything. Your board is there, it's giving you free money. Then that free money you put in money market fund. So instead of letting the interest now sit in your bank account when you receive all your pesa, you invest it in money market fund. So these funds could earn 10 to 12% annually, depending on the fund manager, and it compounds daily. Remember, there are also management fee and interest and withholding tax that will be deducted on the interest that you earn from it. So you can invest your 1770 at 10%. Again, you earn 90 shillings extra in say whatever period you will reinvest. So this is just an example, and it may seem small, but just think of it over 5 years. It adds up. Remember, you're also topping up the money market fund. So you're using free money to earn free money. So your money market fund keeps on compounding quietly. So the board interest feeds into money market fund, which gives you some returns, and that's how you grow your wealth passively using now board and money market fund. However, you can use the same board interest to buy shares. So instead of thinking, do I put in board or shares? Right now prices are high. Do you still want to buy when market is high? You can put your money in bonds. Then when you receive your interest in the next 6 months, we are headed into election period and campaign period. Market may slow down. No? That time when you receive your board interest, come and buy shares that are giving dividend and that dividend. Reinvest now that dividend into money market fund. So you have used three streams. Remember, in money market fund, you need to withdraw the full amount. However, board you don't need to sell to receive interest. Board is there, you are receiving interest. When you buy shares, you don't sell them to receive dividend. They are there. You only receive cash dividend to your bank or M-Pesa. I've done full video on my YouTube channel. Reinvest that dividend now in money market fund where you can't withdraw until the end of the fund. So one income stream funds another. That is board's interest feeding into shares. Dividends from shares feeds into the money market fund. So that way you have not lost opportunity. Remember, if you bought shares, you lose board's interest. If you put in money market fund, you lose shares and you lose board interest. So you can also use your board interest to buy shares, especially now when prices deeper. Like let's say with now the 1770 and say share price dips, and share price dips, you can buy a few shares of KCB or even Safaricom, and you can do that for the next 5 years until now full amount is returned to you, which then you can come and buy more shares in if there's no other board you can buy. So when these companies pay dividend, reinvest that in money market fund. Now your board interest funds shares, then shares dividends funds your money market fund. That is a complete loop of reinvestment. So that creates a three-in-one investment cycle. And that's how you should be thinking when investing. Don't try to compare both interest, money market fund interest, and returns on shares. Think how one can feed into another. You already know money market fund, you can't withdraw interest alone. Because once you withdraw that interest will not earn money. Shares, you don't need to sell to receive dividend. Board, you don't need to sell to receive dividend, to receive interest. So you invest in board, which gives you interest. That interest put in shares. Shares gives you dividend. That dividend put in money market fund. And now, when you withdraw your money market fund, you can put now all that money now back to shares. So basically, now with our example, EABL board will pay you interest on every 6 months. Reinvest that interest into shares that are giving dividend. Then this dividend, when you receive, put in money market fund. You're just running one guaranteed source of income, which is secure board, which you receive back your money, and you have a guaranteed return of 11.8% into other multiple investment. No new money you need to put in. That just for small interest feeds into shares. Shares you receive dividend by put in money market fund, and that's how you grow. Then when you receive your say money market fund, you can decide to put it even in pension, which now grows your wealth into retirement. So the results after 5 years, you have earned a total of interest of 17,700 net of withholding tax. That means you have bought shares worth 17,000. The dividend these shares give you will have funded your money market fund. So you have grown wealth where you have decided to go to money market fund and don't make anything. Maybe make the 17, but you have used the interest to build another uh, asset class that is giving you more money. That's how smart investors grow wealth. Steadily. Instead of just comparing where do I put my money, think how can one feed into another. Don't think how shares these are returns. This money market fund is this, bonds is this, pension is this. Think of how one can feed into another, and that's how you grow. By letting money feed itself through compounding the investment. So for EABL board, that's just a summary. You can invest with a proposal shares every half year. Put it in shares. Then dividend you get from those shares, put in money market fund. You find you have grown your wealth after 5 years above 30,000 by just reinvesting. Yeah? And also remember, these shares are also appreciating in price. You can decide to sell and realize capital gains. So let your money work for you, but don't let decisions work for you. Let money work for you. Put in one, which feeds into another, which feeds into another. Watch full life trainings, which I've done previously and which I'll be doing on my YouTube channel, Gentle Sad Studio, and a playlist, My Wealth Guide. Though I'm in the process of rebranding that channel into full My Wealth Guide because it trains on how to grow wealth. If you found this strategy helpful, remember to share this video with your friends and also like and subscribe. Also follow for more if you're on other social media platforms. I'm expanding these trainings to other social media so that I reach as many people as I can. Trainings on boards, money market fund, dividend investment, how to grow your wealth, shares at MNC, shares in international markets, ETFs. I will also be going deeper into other technical trainings, forex, CFDs, bitcoins, and such, and crypto. So stick around and remember to subscribe to this channel. Thank you. Let's meet in the next one.